Yes, the NSE All-Share Index, of course, has been trading flat over the last few sessions. Today is more of the same. We saw the NSE All-Share Index up about 0.1%, closing at 36,904 points. And Mobil Oil, Flour Mills, UAC, and Forte Oil were among the top leaders on the day. So, pretty mixed bag in terms of gainers. And bank sentiments for banking stocks, however, has become more negative in the last 3 months as new regulations by Nigeria's central bank and Monetary Policy Committee take a toll on earnings. Banks are now forced to look more towards the retail segments to drive earnings growth. And joining me to discuss the latest moves by banks is Olumide Akindele, Head of Proposition and Liability at Diamond Bank. He's part of the retail banking team there. Thank you so much, Olumide, for joining us. So yes, like I mentioned, today, clearly the banks are not among the top gainers. I think it's reflective of the mood around banking stocks right now. And I just want to get your thoughts about how the banks are coping with the new challenges that the new regulations are of course, bring it to the fore. Clearly, the CRR debit is something that's hit banks pretty hard, especially their funding costs. And then, of course, we also have earnings hit by the cuts to commissions. Your thoughts about how banks are changing their strategy and adjusting to this new environment?
Thank you, Wale. It's always a pleasure to be on the show. I think in the last 3 to 6 months, we've seen a radical change within the banking sector. Whilst on one hand, the investors' expectations are still rather high in terms of the return to shareholders' funds that we're going to find in the next 2-3 months. On one hand, that's still been driving a lot of activity within the banking sector. On the other hand, as you rightly pointed out, the regulator, CBN largely, has introduced a number of regulations over the last 6 months that have made banks sit up to start to think of other ways of keeping the interest income alive to match shareholder expectations.
All right, so what are the new trends we're seeing, Olumide?
I think part of the new trends we're seeing is most of the banks are looking at other revenue streams. So you mentioned retail. I mean, retail is obviously a key component part of retail. And even within retail, you're looking at areas where, some banks are looking to drive some income, like the unbanked sector, for example, or looking at how, they can introduce a lot of products that will meet the retail demand in terms of customers going forward. You also find there's also a lot of work being done in terms of keeping costs down. So investment in technology, investment in outlets and services to actually look at the retail model as a whole is also, keeping the banks busy going forward.
Yeah, clearly these initiatives obviously will increase margins or definitely promise higher margins, but then the big question is how quickly can banks ramp up earnings from these initiatives? Your thoughts about how quickly we begin to see the impact of this on the bottom line? There is a broad view now that banks are going to be hit quite a bit over the next few quarters.
Yes, I think that's a double-edged question in the sense that how quickly the banks will recover is how quickly the banks actually adopt a full-blown retail strategy. There is still some concerns in some areas of the banking sector whether that's the area that a lot of banks should go into, given the high cost of entry at this stage and also the investment that is required. I think what some banks will clearly move a first-mover advantage is if they export areas within the retail market that it's a no-brainer, the low-hanging fruits that will begin to yield a lot of returns going forward. So like I mentioned earlier now, the areas of unbanked sector where it's an untapped area, so you have to go with your eyes very widely open to see what areas that you can actually get value from.
Right, sounds like a risky place to go. So talk to us about initiatives like agency banking. I know that the central bank has already put out some requirements and policies around that. So how is that working so far?
Well, we just recently got the final nod, more or less, from the CBN in terms of the agency banking framework, and I think it's still very, very early days in terms of what the strategy should be for agency banking. I think what will happen, or what I personally see, is that most banks will begin to look at how they can partner, leverage on existing networks to begin to actually mine the opportunities in that area. But like I said, it's not an straightforward market that you expect to see immediate returns. There has to be some expenditure in terms of investment in infrastructure, understanding the market, managing even simple things like liquidity. How do you how do you manage liquidity for fixed agents, for example? How do you make sure that there's trust and confidence in that market? You know, you don't know. We're talking of areas where, you know, traditionally they've not been banks. You're trying to bring in, you know, taking banks to the people. So there's still a lot of work in terms of education, in terms of investments, in terms of looking at that area, particularly to look at how you can actually, you know, mop up revenue incomes from that area.
Right. Olumide, let's leave it there. Thank you for joining us on CNBC Africa today. Olumide Akindele from Diamond Bank giving us his thoughts on retail banking in Nigeria.